January 2026, Nigerians will enjoy relief as the Central Bank of Nigeria phases out 5 major bank charges to lower financial burdens and deepen financial inclusion. The reforms target fees widely criticized for eroding customer deposits, including certain transfer levies, card maintenance fees, and SMS alert charges. The move is part of broader efforts to enhance consumer protection, promote transparency in banking, and support the cashless economy. Analysts say the policy will particularly benefit low-income earners and small businesses while forcing banks to rethink their revenue models. We have joining us now Muktar Mohammed, the CEO of Financewithmuktar. Thank you for joining us.
Thank you, Joanne.
Yeah, pleasure to have you. So, what are some of the 5 specific bank charges that perhaps will be eliminated from next year, January?
Yeah, I think it's a good thing that we are hearing that. For me, I'm more excited even by that alert own type of charges, whereby you are sending me alert and I'm paying for it. And so people like me, at the point I got upset and I went to my bank, I said, you don't have to send me alert, just send me email. I don't have to be paying for that. I think it's a good thing when you look at what the government is trying to do, especially through the tax reform act that are looking at those about those fees, card maintenance fee. I don't know what it means to maintain my card. I have to pay for a card that I paid when I was collecting it. So what was that money meant for? Back transfer no, not even back, electronic transfer fee. So all these are, I think it's good. But again, the government is still going to be collecting their withholding tax. So it's a means of also reducing the burden on customers, and I think it's good. Like you said, financial inclusion will be better now with that. And for me, also it will also bring competition again for the banks. Why a lot of Nigerians are now moving to the fintech smaller companies, and because of some of these charges that the bank charges, so that also will bring competition. We could also see the fintech company reducing their own fee also, and that would be good for the consumers.
Yeah, at the end of the day, the consumer wins. But aside a more competitive environment, what does this mean for the banks who have enjoyed the revenues from these levies?
Yes, but again, you have to look at how much of this revenue comes from these levies. If you look at some of the banks' results that came in, the last result, we've seen that most of their levy comes from their core area in terms of lending. Which so for me, it will mean the bank will re-strategize. Some banks have already also cancelled these levies already. They are not collecting those levies, and they have been attracting more customers. Yes, it will affect in terms of some of the numbers, but I don't think it will affect that much, especially because most of the banks have already expanded their loan book, and that's the core area where they have to grow their income. Yes, this will affect the non-income profits again, but I think it's going to be a very challenging years for the bank. But don't forget also that the banks are also beginning to become a holding structure. So it is no more like the banks that you know that just depend solely on.
Hopefully we're able to get him back. But the banks have experienced quite a lot of reforms over the last couple of, I would say over a year now, and I think it will end, maybe, who knows what we'll come up with in March 2026, the end of the recapitalization exercise. Do we have Muktar Mohammed back? Are you with us now? All right, great. So we were focusing on how...
I'm here.
Yes, we were talking about how banks will have to re-strategize. There are those who are concerned that perhaps they'll find another way or window to collect some of these levies, perhaps increasing other charges. Do you see them doing that, or there's a broader strategy outside of laying more burden on the customer?
No, I don't see them doing that again, Joanne. like I said, the competition is already steep. A lot of Nigerian banks are going to be recapitalized, just like I think I heard you talking about the recapitalization drive that they're about to do. A lot of Nigerian banks are going to recapitalize, and you can see the effect of this recapitalization now. Most of these banks are beginning to think of expanding their spread outshore of this country, and also thinking of how to bring more profit to their investors compared to what it used to be before. So I don't think they are going to find another way of charging customers. They are already expanding. They will have enough capital. Like I said, those capitals will be invested in other sectors of the Nigerian economy, both for long and medium term. And again, like I said again, they are now a holding company. So that alone also is an advantage for them. So I don't think they will be looking at that, because that also will not help a lot. They're already competing against some of these fintech companies, and this will be a better way and to also be able to compete favorably with them. And don't also forget, like I said, they are also a holding company. They are also having this fintech company, and so they will give their own fintech company more advantage compared to those players that just stand as a fintech company alone.
And looking at the banks as a whole, they have been through, I mean, it's been one thing after the other for the banks. And it's all to sanitize and reform the sector. How do we ensure that the dividend of these reforms are delivered for both the banks and the larger economy?
I think for the dividend to be delivered, then you have to also look at the regulators. How are they going to regulate this bank? That has always been my fear. We want to grow banks to a 500 billion capital base. Our regulator, 500 billion regulators, will they be able to regulate this bank? We saw that happen when the bank went as high as having 25 billion during the first recapitalization, and how that made them to invest in various risk assets that at the end of the day became a toxic asset, and almost wiped up investors' funds, and also got some banks shut down permanently. So I think what we need to be looking at is how the regulators will be able to manage these banks in terms of the capital that they will have, and make sure that their risk structure are well managed. That for me is going to be the major challenge if we really have to ensure that these banks are strong. But again, like I said, it's good for our economy. But again, we have to look at the risky nature of the type of investment that they will be giving to their investors, and also the larger economy, because any systematic failure in the financial sector have a large implication on the larger economy.
Indeed, and we'll be tracking all of that and more. You have highlighted that this elimination of 5 levies, will drive more competition between the banks, the traditional banks, and the fintechs. And we know a lot of people flock to these fintechs because it was all no charge, no fee, move your money freely. What's going to be their sell-off point now for the fintechs?
I think their selling point is unique. Their selling point will still be that that interest that a lot of Nigerians earn from those fintech companies. I think that would be their selling point. Maybe they may have to increase those interests to them, those people that are keeping in their money. And the fintechs, I tell you, have been one of the most successful story of the Nigerian financial sector, in ways that they've been able to drive in financial inclusion, especially from the rural area, and the kind of product that they've been able to produce, and the seamless nature that they've been able to address some of the challenges, especially when it comes to fund transfer, how they are able to address it within 24 hours. I think that has been their selling point. What they need to do is to improve upon that, compared to the normal conventional banks that you have an issue that have to deal with transfer. It will take you days or sometimes weeks, and sometimes it could even be months. But for these fintech companies, I think they've been able to manage that, and they will resolve complaints for bank, and the interest that most of these customers earn on some on this fund that they keep in these banks as being one of, and this fintech company has been one of those selling point. I think what they will do is to see how they can improve upon that and get more Nigerians into their space. That will help them drive more profits, and that will also make them become more competitive and be able to deal with the challenges that will be coming from the conventional bank, especially when these levies are out.
Indeed. But whatever the case, the consumer benefits from all of this. And I think it will also be interesting to see how this would drive adoption of, cashless policy, cashless payments, digital transfers in Nigeria. How do you see this having effect on that?
Yeah, and I think that would be the major challenge because the informal sector, one of the key drivers of the Nigerian economy, is largely driven by cash. So, and that is where I think the fintech company or the normal conventional banks will begin to see how they can get more of this sector, begin to look at this cashless policy, how it help their business grow. And that also will come with them also thinking of reduction in terms of charges when you have to deal with a POS and when you have to deal with that POS to get your product. Because when you go to some of these smaller business, they tell you that they have to pay so much to get to a POS. So when you are going to pay with your card, they tell you that if you are going to pay with your card, maybe that product is about 50 naira, you'll be paying about 150 naira because they want to add the 100 naira charges that they think the POS operator will collect from their hand. So I think what we'll need to see is also for the operator that are giving them those POS to also reduce their own charges to make it attractive for them to give to me and you for us to want to do transaction with them seamlessly without them incurring extra charges and without me incurring extra charges. So if I know as a consumer I will not attract extra charges, then I'll be more compliant to do transfer to them. I will also be more compliant rather than going to the bank queuing up to get cash to give to them. So I will be it will be a win-win for both the consumer and also the market and the producer. So for me, I think that's what will definitely happen, but it has to take a lot of enlightenment because I jokingly said that I was in Ibadan over the weekend and we went to the market and were to buy tomatoes and we're thinking that we could transfer just like what is obtainable here in Lagos. But when we got there, the lady said, no, we don't collect transfer. You have to give us cash. So we have to start looking for cash to give to them. So in this transformation, in this digital space, enlightenment is key. Why in Lagos, we are beginning to see smaller business embrace cashless policy, but going to the rural area, which control about 70% of this informal business, especially the area of agriculture, they have not embraced it because of these charges and also because they don't trust the system in terms of how to resolve their challenges. If I say I make a transfer and it did not get to them.
Indeed. But we'll see how far implementation goes in that regard. I think we'll also be tracking some of these levies as well. We know that these reforms, there have been pushbacks with some of them, especially with the tax reform bill, right? There has been pushback, there have been engagements. Do you see that happening with the banks? Do you see any sort of pushback? What feelers are you getting? Do you see them perhaps fighting this in any way, or it's a done deal?
Yeah, and I think I was in your studio where we talked about the capital gain tax. Again, how it was a pushback, and now the government is saying we'll look at it, and we are just hearing this. So we might see those pushback. Remember, there was a time that you remember the ATM issues where banks were saying that the Central Bank was going to fine every bank that refused to put money in their ATM. And they came out and said, look, it's all about maintenance of those ATM that is the challenge. And CBN at the point fell back to them and agreed that they should increase the charges on those that are using those ATM. So definitely the banks will have their own side, because that's why I said that where the bank engaged in this issue, where did they engage the banks before they passed this law? And that has been the challenge, Joanne, because even in the capital gain tax, remember, it's all about engagement that was not there. Do you just come up with this policy, then after that engage, and then there will be a pullback? But because they will tell you that they need a lot of time to prepare for it. So for me, that is my major challenge. There might be a pullback, especially if they are not carried along, and then whether the CBN also was carried along. And so if the CBN is not carried along, and that means the banks are not carried along, and that may be a pushback, because what we are seeing now is I am not too so confident that we'll have all of those beautiful things that we see in that tax reform act seeing the light of day immediately. There might be still some stakeholder engagement, and I think this also might be part of the stakeholder engagement that we might see.
All right, we will get back to this and perhaps try the conversation together in just a moment after this break. Set to stop paying at least 5 bank charges by January 2026, namely 50 Naira electronic money transfer levy, stamp duty on salary transfers, stamp duties on investment transactions, stamp charges on stocks or share transaction documents, and 50 Naira charge on transfer within the same bank. We've had Muktar Mohammed, CEO of Finance with Muktar, provide us quite some insight into what to expect and the competition that this could potentially drive within the sector. Of course, as you have cited, Mr. Muktar, there may be pushbacks, right? Who knows what will happen? But what role should perhaps consumer groups play in all of this? What role should fintechs play in all of this, perhaps to drive this reform?
We have the consumer goods, the consumers groups who have pressure to make sure that this is the light of the day. I think that for me is what we should hold the government and make sure that this financial institution abide by this law, especially if the government said implementation will start immediately. And then with the ones that are in the hands of the government to control, it will be glad for us to see that, because all these stamp duty charges and everything, the revenue doesn't go to the bank, it goes to the government. And so that means government also should be able to stop their own immediately. And maybe that is what we'll be seeing, because if you look at it, even the electronic transfer levies, some bank tells you that there's a sharing formula they do with the bank. So we might see that what we'll see immediately are those duty stamps in terms of investment and others having stopped immediately by January. But I am not too sure about that account management fee and then all that again, and then transfers within banks also should see the end of that, rather than paying charges for transferring from my bank to my bank. Or maybe I have an account that transfer from one account to another. And for the fintech, and like I've said, they've been one of the great stories of Nigeria in terms of financial inclusion. And I think they've done very, very well. And I think they need all the support from the regulators to continue to do better, especially in the area of financial inclusion. And what I think they should do is that now they'll have a competitor in terms of some of these fees. And so, like I've said before, now it's also for them to up their own area, especially in terms of value that customers will get in terms of keeping their money with them. I think that's what is going to happen, because nobody pay for similarity. People pay for the difference that they can get. So, and I think they brought a lot of value in terms of difference. They have to improve upon that for them to be able to continue to be in business.
And I think it'll be interesting to see how this pans out. There are those who are saying this is the reform committee giving the customers a win, considering there have been harsher tax reforms. So let's hand the dog a bone, so to say. Should the banking sector perhaps also expect more reform? Is this the end, or there's more tightening ahead?
You also need to know that the financial sector is an evolving sector. So evolve, and it's not a static sector that you just think things will become the same. It has to call for evolving and creativity. And that is why the central bank, because of the evolving landscape that we're about to experience in our economy, told them to recapitalize to the turnover of 500 billion. So I think we'll continue to see those reforms to drive inclusion, and also to help the bank also get more Nigeria into the banking, Nigerians to own bank account, and also be able to help the larger economy, especially the real economy. I think, and again, like I said, one of those success stories also, some of these banks are becoming big player, not just in Nigeria, but outside the shore of Nigeria. So for me, those are things that call for more regulators, regulation framework in terms of if you're outshore of the country, what are you supposed to do? The regulators have to spell it out. If you're acquiring a bank outside the shore of this country, what are the benefits of becoming a global player, a local player, or a state player, or a regional player. All these are what the regulators will definitely be tickling as time goes on. Like I say, it's not a space that you can just say, this is how it is, this is how it's going to be. The banking sectors have evolved over the years, and I don't think we have seen the last of it. Don't forget, we are going into an era of serious AI. And so the banking sectors will not be left back. It's already happening in developed economy. Then definitely will trickle down to the Nigeria economy. So that's part of some of those reforms that we will see going forward. And that may imply that the regulators will have to put check and balances, which will have an effect on the banking. I think the banks should know that we are in an evolving economy, and they are playing a very evolving sector of the economy that need ticking one's times and as time goes on.
Yes, so more to come, especially because of the pace of innovation within that sector. Thank you so much for your time and perspective on the show today. Muktar Mohammed, CEO of Finance with Muktar.
Thank you for having me.